So let's take a look at how this all affects setting up the journal entries. First, we'll cover operating leases. To record an operating lease, we'll need a journal entry to record the lease itself. We'll then need another journal entry to record the initial payment of the lease. We'll also need 2 journal entries to record the monthly operating lease payment. Notice that this first journal entry affects 3 accounts: lease expense, lease liability, and equipment operating lease. The second journal entry affects the lease liability and cash accounts. In this journal entry, we are adding the accrued interest to the lease liability account. All right, now let's take a look at the journal entries for a capital lease. The first entry is to record the capital lease. We'll then need another journal entry to record the initial payment for the capital lease. Finally, just like before, we'll need a journal entry to record the monthly capital lease payment itself. Notice that there's no lease expense account here. Payments are recorded similar to standard liabilities. One payment split into interest and principal. I know it seems like a lot to throw at you, but the structure is the same for both. Record the lease, record the initial payment, and then record the monthly payment. To put this into perspective, let's hear from one of our experts.
I worked with, there's 2 different things here, right? One, I've worked with a medical supply company, and when they made an agreement with the equipment that the doctors would buy, there were times that the doctors would not hold up their end of the bargain, whether they lost business and they couldn't keep paying. But my employer would go and they would take the equipment back. And so, that's a tough situation. But it really is something that, if they're not keeping their part of the bargain, then they can't keep it, right? They had huge equipment. And so it was just something that if they weren't able to make the payments, they got it taken away. So yeah, that was a tough thing. But, then my employer was then able to then sell it to somebody else and then utilize, move on and take that equipment to another doctor or chiropractor, depending on what the equipment was.